Gold prices are soaring as central banks buy aggressively, but experts warn that a stronger dollar and rising interest rates could dim its luster in the near future. Why? What happens next? I'm joined by Dr. Steven Enticott from CIA Tax. Good to see you, sir.
Yeah, good to be on. Gold prices. This is probably one of the most often questions I'm asked. You know, should I buy gold now? The time to buy gold was 3 years ago. It was $1,650 an ounce. It's now up over $4,000 an ounce. I think it hit 4,380 was its top. Like accountants always buy in gloom, we never buy in boom. So accountants were buying gold when it was $1,650. At 4,000 though, people are still saying it's got a lot further to go and you still should be buying it. Now I've got 7 reasons here, 7 quick reasons on why gold flew so high, and that'll give us a bit of a background before I tell you why I think we may have hit a bit of a high.
Sounds good, let's talk about it.
So the central banks, obviously, they're aggressively buying gold. Okay, so they're out there going, well, the currencies aren't real great here. Gold is always certain, has been for thousands and thousands of years. Let's shore up our reserves by putting a bit of gold in there. So you're competing against world governments buying up gold. It's priced in US dollars. So as the US dollar has come down against other currencies, gold's got cheaper. So people have been able to buy more gold because of the lower US dollar. Rate cuts support gold because if I want to own gold and I have to borrow money to buy it, I'm having to pay a much lower interest rate than having to pay 7 or 8, 9, 10% or whatever it historically has been. Geopolitical tensions, this is a rough world, whether it be Russia, Ukraine, China, Taiwan. We're always a hair's breadth away from something blowing up and putting some significant pressure on the financial markets. Global debt levels, not a new one. We're worried about governments being able to default on their bonds and all those sorts of things. Gold has stood the test of time. It's an insurance policy, if you like. ETFs are coming along. Instead of being an exchange-traded fund buying stocks, they're actually buying gold and holding gold and physical gold. So they're actually putting pressure. But number 7, the last one, is the one which I think we need to worry about. A couple of weeks ago, you might remember, there was some footage of people lined up.
ABC Bullion in Sydney Martin Place.
Absolutely. So when the mums and dads are jumping into the stock market, or when the mums and dads are lining up to buy gold bullion, I think we've got a bit of a problem.
Why is that?
All right, so there's 3 reasons attached to that. So I've given you 7 reasons for why it's run, 3 reasons why I think it's had its run. If the US dollar starts to gain strength, Trump policies, make America great, and all of a sudden people start going, no, America's going well again.
So if it works?
Yes, it works, that's right. So then the American dollar will start to rise. And then, as I said earlier, that means gold's going to get dearer, less people will be buying it. After any rally, the speculators in this world will take profits. So when it was $1,650, it was a no-brainer, buy it. It's too cheap, fundamentally undervalued. Now it's at 4,000, you're going, well, I've just made 250, 300%. Is it time to cash out? So we're starting to see some of that, especially when it goes through a barrier.
The challenge there be, though, you touched on it before, that as the price of gold goes up, that there are less people wanting to buy it because they feel like it's reached the peak. So if you did buy gold 3 years ago and you're watching the mums and dads get involved, are you able to now sell even though it has gone up?
Absolutely. Any exchange, any pawn shop will buy your gold off you if you turn up there with it. So it is easy to sell gold. But the number 1 reason I believe gold has had its run, and I'm going a bit contrarian here, most people still think it's got a bit to go, it's the opportunity cost. If you own gold, if you've had to borrow money to buy gold, you're losing money at 5, 6, 7, 8% because gold doesn't yield a dividend. Likewise, if you're holding gold in your portfolio, you're not receiving any interest or bond or whatever. It's just absolutely non-productive. So after a massive run, it's great. If you bought in early, I probably wouldn't sell. I'm not going to sell my gold. I'll just keep it as a bit of a backstop. But if you're going out there buying it or forsaking income, I reckon we've reached a point where people are going to go, hang on, the dividends are a lot better, the interest on the bonds are a lot better. Why am I holding this gold and actually losing money every year?
Yeah, it's a very interesting point. You mentioned something in the 7 points at the start there as well, about questions about the bond market and about whether governments are able to continue to service. It's turned into somewhat of a Ponzi scheme. Obviously, they're borrowing more through bonds to be able to pay back the ones that they've got out there, which is a pretty crazy place. And if it all falls over, you talk about gold, if it all falls over, we're going to need to move to the moon, aren't we? I mean, it's pretty crazy.
Yeah, I'm a bit of a skeptic with this. Like, I actually think the whole world has a vested interest in making sure it doesn't fall over. You know, whether you're Russia, whether you're China, whether you're America, whether you're the BRICS countries,
it'd be a
whatever.
disaster.
If one goes, we all go.
Yeah.
So I sort of feel like there's a vested interest in let's just keep this ship afloat at all costs.
Yeah, well, we watched the GFC where it started off with, you know, Freddie Mae and Bernie Mac, and then Lehman Brothers, and then off it went. And I think that the lessons from that are pretty interesting. I mean, Jamie Dimon's very much warning from JP Morgan about there could be a big correction. We're hearing up to 20% from some as well. Is that one of the reasons people have been heading to gold? Just
absolutely.
That certainty?
Yeah, absolutely. Gold will always survive. You know, it has for tens of thousands of years. People have always kept it as a traditional, you know, source of wealth and protection through big crashes. But there is a point, and that's the point I'm making, there is a point where that gold is actually costing you money now. If it's not going up at 10, 15, 20% per annum, you're going backwards. So there'll be a point where people go, okay, well, let's have a look at the risk versus the return. So if you don't perceive that risk to be there, that global sovereign risk, like I'm sort of the view that I think everyone's got a vested interest in keeping the ship afloat. If we get to a point where the whole lot goes belly up, whether you've got stocks, bonds, real estate, gold, I don't think it's going to matter too much. Food will be your number one resource.
Yes, and you'll be spending a lot of gold on that. It's interesting, I was watching a documentary about the lead up to Nazi Germany, and it cost something like 20 trillion marks to be able to get a loaf of bread at one stage. So good luck with that. Talk to us though about how interest rate cuts actually support the price of gold, because at the moment, different countries in the West are doing different things with interest rates. We're seeing cuts in the US, we've seen cuts by the Bank of England, but in Australia, peculiar situation where unemployment, obviously inflation is going back up again. The RBA doesn't know what to do. So if you're trying to purchase gold and Reserve Bank and central banks and interest rates can impact the price of gold, what would you be doing?
Absolutely. Well, the number one factor that drives any stock market is fear and greed. Supply and demand is another technical term for that. But what we're seeing with gold is there's fear, all right? And money's cheap. You know, when interest rates come down, as you rightfully say, it's cheap to go get money. If you can go borrow money at 2 or 3%, which you can in the States, and go buy a purchase of gold, that's cheap money. If interest rates are rising, the economy's booming, the stock market's going up, you're probably losing 20 or 30% holding gold because everything else is going up so strongly. So the worse the world's going, the stronger gold will be. Ultimately, every run down, and we've had a fairly significant post-COVID boom / rundown, comes to an end, and the money flows back into risk-on assets, and that's when gold will come down.
What about the concern about rising global debt? We're talking about $100 trillion. The United States obviously has a lot of it, but you look at even state governments in Australia, and there are concerns about rising debt there as well. Does debt and fears about debt lead people to gold?
Absolutely leads people to gold, because, you know, at the end of the day, if you get a government default, you can turn up with the US Treasury bond and say, I want to get that back. And they'll just say, here's another 2 bonds we're going to issue you for your 1 bond that's now worthless. So ultimately, yes, there's a run to gold, because you can turn up anywhere with a gold bar and people will take that as gold, if you like, and use that as a currency. So there is a run to gold. But what's another zero? You know, if you look at the All Ordinaries Index, you know, 15, 20 years ago, or, you know, how many years ago when you were starting in journalism, Aaron, do you remember what the All Ordinaries was?
No, I don't, but I would imagine it's nowhere near what it is today.
That's right, you know, well under 1,000. You know, I remember growing up, you know, All Ordinaries has hit 300 points.
Yeah.
Well, it's now 8,000, 9,000
So the point
points.
being that over time, everything goes up.
There's another
Gold
zero.
goes up.
There's just another zero.
Yeah.
Yep. And I think that's what we're heading to. You know, with inflation and borrowing, government borrowing just keeps putting another zero on.
All right, so to simplify it, right now, people watching, should they be buying gold or holding off?
All right, well, as a fundamentalist, as an accountant, I believe personally that the opportunity cost of now purchasing gold is a higher cost than actually the return side of purchasing gold. It's had one almighty run. My view as an accountant is you always buy things that are fundamentally undervalued. Gold, to me, has had its run. Let's go look for the next asset class that's fundamentally undervalued and start investing in that.
All right, Steven Enticott, appreciate your time as always. Thank you.